morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592, the website at allamericangold.com, and it is a Hump Day Wednesday, and it also happens to be a Federal Reserve. This is the second day of a two-day meeting. This is the day they make the announcement. There's going to be a press conference, the Dog and Pody show, as I guess all as it took was for producer inflation to go to double digits. We found out yesterday, producer price index up 10%. And of course, 10% the way they count it. We know that wholesale inflation or consumer inflation was at 8%. And of course, February numbers, March, most people are talking 9 or 10% there as well. And Jason, we're going to get a whole big whopping quarter of a point interest rate hike and a pretend that we care and want to fight inflation story coming out of the Fed today.
Well, that might do a whole lot of nothing when the inflation numbers go up maybe another 1% next month. I don't know how that math works, Joe.
Someone needs to explain it to me. I mean, because you got to remember now, they only have this meeting every 6 weeks. Now, they could have a meeting at any time. Right? It's not like it had to be in 6 weeks. They could have said, hey, you know what, time out. We screwed up. We got to have a little emergency meeting, and we should have been hiking rates a year ago. But again, remember, everything's a crisis. And this is how they operate. And when, and they keep promising, oh, no, we're going to get back to normal. But, next year or the year after, we never get there. And now, unfortunately, and all of you know this, this is a futile effort. You'll get the stock cheerleaders. Listen, Wall Street's not going in. Wall Street's going somewhere, and it's not up. That I guarantee you. Home builders today, they haven't even raised the rates yet. The 10-year note, I just want to let you know, we've been watching this yield curve inversion. Yesterday, the 7-year note started yielding more than the 10-year. The big indicator, and what that means is, listen, the bond market is saying, hey, bad things are happening. In the markets we don't talk about, junk bond markets, yields are rising. Russia today, saying it's up to the United States whether or not they make this bond payment. It looks like, I think it's going to be a no-go because it looks like the Russians want to pay it in rubles. And, of course, this is a dollar denominated loan. So I don't know. As of right now, Russia has not made their bond payment. This would be the first, I guess, major currency default in a long time. But when you get the lower dated yields, and they like to watch, especially the 2-year versus the 10-year. When the 2-year note yields more than the 10-year note, that's the bond market's way of telling you a recession is coming. And Jason, it's just like I told everybody. I've been telling everybody exactly what's going to happen. How can I know what's going to happen and Jay Powell and Janet Yellen act like they're clueless? Because the real reason is they're not clueless at all.
I don't know, Joe.
They already know what's going to happen. They just say they're just not going to come out and tell you that this is what's going to happen, because if they did, right, could you imagine if Jay Powell told the truth today? They'd probably have to shut Wall Street off, Jason.
At the beginning of what we were saying with Russia and the United States, I got the Three Stooges in my head, because you're basically saying that Russia is playing a game. Hey, it's up to the United States. It's their responsibility if we're gonna make debt payments, if things are gonna go better. It's all their fault. I like Curly and Moe. You hit the hand and then it swings back around and hits the other guy back in the head. Because hey, we'll pay it back in rubles. Hey, you just destroyed the ruble, but hey, we'll pay your debts back in the thing that you destroyed. It's it's kind of a bad joke, isn't it, Joe?
It really, really is. And I was getting to, the home builders today came out and said, man, yeah, sales we're not real optimistic anymore. And of course, obviously, building new homes is very expensive, takes a long time. You can't get anything. And already, with the 10-year note at 2.15, they're saying that sales, people looking to buy has dropped off significantly. Retail sales today, wow, missed by a mile. And I don't know yet, but based on the retail sales today, the first quarter GDP, Jason, looks like it's going to be negative. So we could already, now a recession technically is going to be 2 quarters of negative GDP growth in a row. But today, no good news is out, but the Dow's up 400 points because their main cheerleader, Jay Powell's going to talk. And I got a funny feeling he's going to say, yeah, we're going to raise rates, but hey, there's a lot of clouds. I don't know, Russia, Russia, Ukraine, energy, right? China shutting down again. He's going to give a whole litany of reasons of why they may not raise rates as much as people think.
Right, Joe, and you were talking about homes there. I mean, in my neighborhood, they're still putting homes up, and here and there, not quite as fast as they were last year, and they're all missing garage doors. They have these big pieces of plywood. It says "Do not remove," and there might be a whole new market out there, Joe, for new homes with no garage doors because they can't get the garage doors in to put them in, Joe. It's right?
It is amazing. Yes, a garage door. We can't even make those anymore. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe Jaquint, Jason Walker. Tesla has hiked prices. This is crazy. For the second time in less than a week, saying that commodity prices skyrocketing, enforcing price hikes. 2 in a week for Tesla. By the way, come to find out, Tesla was buying their aluminum bodies, the aluminum from Russia, of all places. And then we've talked about nickel. The nickel market closed again today, Jason. They didn't even make it 24 hours, and they had to shut it down again. And this is something, again, this is of huge concern. These are signs. These are warnings. When all of a sudden these markets, which have run for years, decades, and then all of a sudden they just start blowing up, those are warning signs. We saw it in the coal market, the nickel market. Look at what happened to Barclays in the oil market, right? And all of these things where all of a sudden these companies are losing faith in these commodities markets. And Jason, because there's so much money out there, these trades are absolutely going wild.
Yeah, I got 2 quick things. One, it's maybe the garage door market's closing because you're not getting them on the homes, at least where I'm at. The other thing is, didn't Elon Musk challenge Putin to a fist fight or something? He wanted to go out in the backyard.
I think so.
Yeah, he went to. Hey, I want to beat you. He's a judo. I guess Putin's a judo guy, and the judo club or whatever decided to take him off the leadership role or something. But then Elon Musk said, "Hey, I want to beat you up. Let's have a fight." It's ridiculous what the company and the government leaders the behavior.
I don't know about Elon Musk, but I know Putin's in his 60s. I think Putin would whoop his ass, but
I don't know, man. I think that would be an interesting. I bet that would be really good TV.
Let me tell you right now, there you go. Right, hey, I got to wait for Russia to make their bond payment.
UFC can never sell.
We're gonna have a pay-per-view, right? A pay-per-view. You gotta buy the pay-per-view to watch him and Elon Musk. Dude, I guarantee you they could raise $117 million for that.
Yeah, they could sell $1,000 per pay-per-view, and that'd be a lot. They'd sell that big.
You talk about garage doors. We're like, we can't make garage. Really? We can't? And it's everywhere. And it's not just garage doors. I'll give you a great, my office here, we're doing an update. we have like this kitchen area, for lack of a better term. And it really, I say kitchen area, we got a refrigerator with 8 feet of cabinets that, has a sink in it, and we've got a microwave and a coffee maker and some cabinets where we store, cleaning supplies and paper plates and stuff like that. It's 8 feet long. It took over 4 months from when my wife ordered the cabinets to when they finally get here. And they tell us, hey, listen, we can't measure for the countertop. We got to get the cabinets in first. And then we'll put measure for the countertop. So 2 weeks ago, the cabinets get in. The guy comes and measures for the cabinets. And we'll be back next week. A week goes by. My wife calls him up. And this is Home Depot. Home Depot goes, oh, well, yeah, we're backed up with the countertops as well. And it's going to be 9 to 10 more weeks to get an 8-foot countertop, Jason. That's
right, Joe. The one thing about the guys out there that are the prognosticators that say that there's going to be a huge market crash, and they also you got these guys, hey, there's going to be a housing crash. The prices of housing is going to crash worse than 2008. It's just not going to happen. It costs too damn much to build a house. You'd be lucky to get a house built for $400,000 in the middle of nowhere in Montana. So, just like what you're talking about, you can't get garage doors done, you can't get countertops. The cost of the houses are going up. Now, I think there's going to be a crash in the housing market, Joe, and it's going to happen. I've said this before. The prices of houses will go up 5%. Your $400,000 house over 2022, well, it's worth $420 at the end of 2022. Hey, things aren't so bad. My house price went up. But if the inflation is 20% on food and energy, that's a crash on your housing prices, and at the same time you're paying way more for everything, Joe. It's really a bad situation.
Yeah, and it's something where I don't know how this really ends well at all, and it's not supposed to, right? This is really when you sit there and you think about what's really happening. You got all the warning signs. Right? Oil shot up to 130. Now it's down at $97, and people are celebrating like that's some kind of a deal. And again, temporary. And I've already told you the answer. It's called demand destruction. And this is what the home builders are saying today. They're saying,
yep.
Not a lot of people were coming in all before. And the ones that were coming, let's face it, you got to have a lot of money. But already, just this slight tick up in interest rates has the buyers disappearing, right? Destruction of demand. Oil today. So they had oil inventory reports, and there's 2 different ones. But there was really unchanged when you take in the amount of crude, gasoline, distillates. When you do the math, it's unchanged. But we had more oil, probably from the strategic oil reserve on the market. But the one thing they noted was that there's been a noticeable amount of demand destruction. Right? $4.70 gasoline is going to do that to you. And this is really how this thing is going to end. We're at the not even the bad part yet, right? We're in the hyperinflation part. And we see all these warning sounds where markets start breaking down, and they've got to close this oil market. They got to close the nickel market over here. Nobody knows if Russia's going to be able to make these bond payments. And now the default markets are starting to show signs of liquidity problems. And we see all of these things. And we see, let's face it, Wall Street really can't go anywhere. It'll rally for a day or two, then boom, make new lows. Rally for a day or two, then boom, make new lows. And I think that trend's going to continue. But the bad part's going to be, as prices keep going out of sight, and the economy continues to slow and the Fed's going to hike 2 or 3 times, it's when it finally breaks. That's when the hard part really is going to come in, because that's when you're going to see demand destruction everywhere. And then you know how it goes. Listen, we've seen it before. We've seen it before during the housing crash, where all of a sudden you couldn't give it away. And Jason, I think we're going to end up seeing that all over the place, that you're going to have banks that can't give away bonds, right? They're trying, hey, I want to get these bonds off my books, but nobody will take them from me. This is the type of demand destruction we're going to see.
Yeah, I agree with that. That's exactly where it's headed. You know, demand destruction that's the key word for where we're headed. And it's no coincidence that the Russian war started when inflation was not going anywhere, Joe. For all of 2021, they kept saying all these things, and it makes me wonder if the Fed really were. It was kind of ridiculous. It was funny how much they were ignoring or trying to play down inflation all during 2021, and then as soon as they sort of just admitted, it's like, well, I guess there's not much we can do about this, and then that's when Ukraine happened, Joe.
Right, exactly right. Let's talk about the inflationary part. Single-family rents posted an all-time record high year-over-year increase, according to CoreLogic. Now, this isn't the Fed, right? They're BS math. CoreLogic actually goes and looks at, calls the rental companies, right? Calls BlackRock, right? Calls them up. Rents were up, single-family rents up 12.6% year over year. So January 2022, rents up 12.6%. CoreLogic said January of 2021, rents were only up 3.9%. So if you really go back to 2020, rents overall are up almost 16%. But listen to some of these. Miami, rents were up 38.6%. Orlando and Phoenix were up pretty much 20%. The lowest annual increase just happened to be in D.C., Jason, of 5.6%. Think about that, was the lowest. You know where the Fed's at with where they say housing inflation is? They're still at 4%. So they're nowhere close to what's actually going on. But can you imagine living in these cities? And let's face it, the cities where all the big increases are the cities where everyone's going. And you got to pay 20 and 30% more to live in an apartment building. Jason, it's absolutely insane.
That's right. Yeah, I live in one of those areas, especially with the Louisville fires, where you lost some housing inventory, and there was still high demand. So it's not really reflective to the rest of the country, where they're moving out of these rural areas or moving into these cities, and then rents just go crazy. And China did the same thing for a long time, Joe. They wanted everybody out of the rural areas. You pack them into the cities, and then things like what's going on with inflation, the rents will just go spiraling upward. I mean, when I bought my house in 2020, it was good timing for me because the rent on that house that I was renting, I can't even imagine. I was at $1950, Joe, and I'm pretty sure it's like $2,400 to $2,600 for that house now. It's crazy.
It's crazy. How about this out of PepsiCo and Procter and Gamble? They've decided that they think that they've hit the point where raising prices isn't going to work. So they've got a new plan. The PepsiCo says that they have changed the packaging on their Gatorade products. And they're going to have 4 less ounces on a take 32 ounce. A 32 ounce Gatorade is now only going to have 28 ounces. Doritos, potato chips, and all their chips. They're taking chips out of the bag. They're right now. Listen, they even have a number. Hey, we're starting with 5 chips. right? We're going to take 5 chips out of every single bag of chips. And hopefully, the prices won't continue to rise. If they continue to rise, hey, we're going to take even more chips out. Procter & Gamble says toilet paper rolls. Get ready. You're going to have a whole lot less. They're saying for every 12 rolls that you used to get from Procter & Gamble of toilet paper, you're now only going to get 10.
Whoa.
You're now only getting, now there's still going to be 12 rolls in the package. But based on how much they took off of each roll, you're really only going to get 10. Candy bars, from Reese's Peanut Butter Cups to Snickers. Yep, get ready. They're going to be changing the shape of all of your candy so it weighs less. In other words, hey, we're just going to give you less candy. And even now, think about candy bars are like almost $2 at the store. I remember when I was growing up, I think a Snickers was 15 cents, and it was like twice the size. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Gold is down. I got gold down 15, but I think Kinko's got it down like $3. But either way, 1915, silver 24.75, crude oil just under $97 a barrel. Matter of fact, just went into positive territory. A couple of breaking things. A tsunami alert has been issued for northern Japan. The Fukushima area, remember that one? Hit with a 7.3 magnitude earthquake, 700,000 people lost power. I don't know any more than that. We'll see. Hopefully not. Let's hope that there's not a tsunami and we have more issues with that nuclear power plant there in Japan. I'm here at Patriot Silver. We got to make this announcement. Jason, I think you guys made this announcement on your show yesterday. Silver is taking a while. We have access to it, but Silver Eagles are 2 to 4 weeks out. Even now, utility or junk silver, we're looking at about a week to 10 days out, Jason, as demand in those markets. It's just overwhelming the supply, Jason.
Yeah, man. I mean, the silver supply and the silver spot price, they don't equal each other. The physical silver is just not as attainable for a couple of years now. I mean, before coronavirus, silver was, what it was. Yeah, hey, here's the price, here's the amount you pay over spot. It was pretty easy, But ever since coronavirus, Joe, it's the silver supply and the spot price just don't match. It really feels like there are somebody out there that really wants to keep buying it at absurdly low prices. Somebody's really hoarding it, Joe, and it makes it harder for us to get it. I mean, if there's none available and we keep bidding it up, and all the buyers keep bidding it up, trying to get it, at some point there's just not enough for everybody that wants it, and you just gotta have to be patient, man, because when we get it, we'll sell it, right, Joe?
Yeah, that's right. We haven't been cut off. We can still book stuff. The second they cut us off, that's when we'll take it off and we won't sell anymore. But for right now, that's what's happening in the silver market. As Jason said, supply is overwhelming. But Jason, I'm going to kick it to you, and I'll be right back in a couple minutes. No
problem. So as Joe was saying, be patient with the silver. I'll say this, be patient with anything, because as I've been filling orders the last few weeks, especially since the beginning of this month, and we saw an uptick in gold and silver sales. As soon as I get a little bit of supply, get a few extra coins in the vault, somebody comes in and wipes me out. So here in Colorado, and Joe has buyers that come in and do the same thing, but I got buyers that come in, they pick up their invoice, and they always buy a few extra things. If you're one of my guys that comes in here in Colorado, a lot of you guys, especially the cash guys, you come in with a little extra money, you buy stuff off my desk, or I got a few extra gold coins in the vault. Currently, I don't have gold or silver extra available. I had some customers come in, they said, "What do you got?" I said, "Well, I got a couple rolls of rounds." We don't sell rolls of rounds on special unless we have a supply of it. We don't sell Silver Eagles on special here at Patriot Trading Group unless we have a supply of it. It doesn't make any sense to have a special on 2 rolls of Silver Eagles. So there's always a few things lingering around in the vault. Well, I have customers that come in now, and they come in, they pick up their invoice, and they just have a lot of extra money, and they're like, how many rolls of dimes you got? I say, I have, 15, 25 rolls, whatever. I want all of them, okay? How many rolls of quarters do you have? I got like 3 rolls of quarters. I want them. I got 35 rolls of half dollars. Yeah, I'll take all of those. That's what some of these buyers are doing when they come in. What am I going to say? No, of course. You come in, that's what we do. We sell, and Joe, right? I don't know if you're back, but
yeah, it absolutely. And when we're talking about stuff like this is exactly what's happening. When we have the world's biggest suppliers, and the biggest suppliers here in the United States saying, "I didn't get my delivery," right? Hey, the mint. They were supposed to be here on last Thursday. Still don't have them, right? And don't know when I'm going to get them. When all of a sudden the bags of silver disappear, right? And again, bars. There's people. A lot of companies aren't making bars right now because they don't have to. And so the supply just evaporates. And like Jason said, and we're seeing this here, this is going to be the best month in Patriot history this month. This is how big demand has been, and it's just one of these things. It's like pulling on a string, right? Eventually, the string breaks and there is no more. And you see that too in all of these paper markets. Heck, it's one thing when the physical markets are breaking down. But when the paper markets are breaking down, like you're at that point, you know what? We can't sell any more paper in this market. It's completely broken. That's the type of stuff that's happening. And again, people have no idea the amount of money the Fed, we didn't have any idea because the Fed was able to hide it for 12 years. They're normally only supposed to be able to hide it for 2. They went to the Supreme Court and said, hey, and it's a national security safety, right? It's for the good of the country that we hide this. And the Supreme Court let them hide it for another 10 years. We just found out, what was it, in January, I think, Jason? That not only did the central bank do all the bailouts that we thought, but they ended up doing more bailouts that no one knew about for hundreds of trillions of dollars. And then we also learned in the issue in 2019, if you remember that, they didn't get to hide that for another 10 years. So we found out about that right around the same time. And once again, what the Fed said they did and owned up to doing versus what they really did and the amount of money they really created. This is why we're in this mess.
Right. They out loud during the 08 housing crash, they admitted to $5 trillion in different ways of floating the markets and saving the banks and all this stuff. And the documents straight from the Fed from a FOIA request ended up being $29 trillion. And it's very possible that they've been putting $1 trillion a week into the repo market since early 2020 when the repo market was having troubles in late 2019. So $1 trillion a week, and it's possibly it's never stopped, Joe. But they're not going to admit to that, are they?
No, absolutely not. Don't worry. A quarter-point rate hike is going to fix it. Patriot Radio News Hour. We're going to be right back after the break. 800-951-0592, Patriot Radio News Hour. Yesterday we had a special with 20s at $21.95. We actually sold out. And then Jason in the afternoon, I said, I think we're going to be able to find more. Go ahead and keep selling them, which we did. I've got 50 more, but that's it. Got 50 more $20 gold pieces at $21.95. After that, it's going to be 22 and a quarter because there's just no product out there. But put them away. 800-951-0592. Buy this pullback because that's all it is. By the way, I got two breaking stories. Bloomberg is reporting that the world's largest energy merchant, it's a company called Trafigura. They trade hundreds of billions of dollars in commodities, and this is what's happened in crude oil and gold and alt nickel. Apparently, they are facing margin calls in the billions of dollars. So this is the same problem that hit the Japanese or the Chinese billionaire. Looked like that was going to be a $10 billion hit. They had to bail them out. But they're saying the largest independent energy trader in the world is facing billions of dollars in margin calls. And I'm going to keep saying this guy's name. Zoltan Pozsar. He was at the New York Federal Reserve. He now works at Morgan Stanley. He's been talking about this for the last couple of weeks. And he calls it what he calls the margin call doom loop, where company after company in every different, it doesn't matter, bond markets, commodities markets are going to be wiped out by these wild swings. Think about crude oil. Hits an all-time high. Well, I guess it wasn't quite an all-time high, but hits $130 a barrel, the highest level since 2008. And drops 27%, goes into a quote-unquote bear market in a matter of days. And now we're going to find out, and I've been saying this, Jason, how long have I been telling people, dude, somebody's on the other side of all these trades, and they're going to get wiped out. The Financial Times is reporting that the world's largest energy traders have joined insolvent banks. Uh-oh. That's not my word. This is the Financial Times. Europe's largest energy traders have joined insolvent banks in calling on government and central banks to provide emergency assistance to avert a cash crunch as sharp price moves triggered by the Ukrainian crisis strain the markets.
Well, Joe, I mean, it's not precious metals, but when the nickel market stayed open only one day and shut down again, I think it's just kind of showing you where things are headed, Joe. I mean, if you can't even keep your nickel market open, who knows how many tens of thousands of people that do that business are crippled because of the shutdown. It's probably getting ready to happen in many other sectors, Joe.
Yeah, and this is this is what Pozsar was saying. Hey, this is going to be like a rolling thing. Think about like rolling blackouts. Well, first it's in L.A., then it goes to San Diego, then it goes to Sacramento, right? Then it goes to Bakersfield, and then it goes to Oakland, right? This is what he's talking about in these commodity markets, and now all of a sudden, this is going to take out. You're talking about the largest energy traders in the world being taken out overnight. No bank can take $8 billion, $10 billion, $15 billion hits. They can't. And this is the problem. And the Financial Times accurately put it. Listen, these banks are insolvent whether you want to agree to it or not. And I don't give to you know what Jay Powell says. They've been behind these markets, bailing out these banks for 15 years. And now here we are. Now you're telling me, let's see, the nickel market's broke, the coal market's broke, the oil market's broke. What? Hello? And, of course, what's happening right now, well, we're just going to pretend it's not happening. Remember during the financial crisis, Wall Street pretended it wasn't happening for over a year. Let's face it, the housing market crashed in late 05, early 06. The financial crisis didn't really hit until 2008. We've got the same problem here. Inflation started running wild really at the end of 2020, all through 2021, now to 2022, and I promise you this is going to end very, very badly, and it's all because the central bankers didn't want to pay the price that happens. Hey, when things crash, banks got to get wiped out, people got to get wiped out, you got to reset. They didn't want to reset. Now, instead, Jason, of a little reset, we're going to get a whole global one.
And, Joe, I'll even go back a little further than that. I'll say that this problem started in the 70s and never went away. There was two things to get rid of the inflation and the problems in the 1970s. They came up with the petrodollar, which they're not going to have that option now. And they gave all of our industries, all of our manufacturing over to China so we can manufacture stuff cheap. You manufacture everything on 2 cents to the dollar instead of paying a whole dollar. That subsided what's going on today. Joe, they don't have an answer for this time.
We're going to talk about that petrodollar and what Jason's talking about in this final segment. You're not going to want to miss it. 800-951-0592. I've got a couple lines open. Get your orders placed. Listen, this is happening. And I know today the Dow's up today because they want to be happy because Jay Powell's going to come out and do his little song and dance. Listen, things are blowing up everywhere. The Financial Times doesn't come out and write a story about insolvent banks and margin calls, right? Just get people's energy or blood pumping. There are major problems inside of all of these markets, and unfortunately for all of us, Jason, this is just one of the symptoms of what has happened. These aren't causes; these are just the symptoms. And the problem is, think about this. Today, the Fed's supposed to start taking liquidity away. Yeah. The Financial Times is out there saying, "Hey, by the way, all these companies and banks are calling they're calling the governments and the central banks to bail them out. They need a liquidity bailout." Jason.
Yeah, I haven't heard too many stories. I know there's a couple, few and far between of companies that are just turning and burning, just really kicking butt, Joe. Since 2020, especially since 2021. Apple doesn't say they're doing great. I hear they're having problems. I hear Facebook having problems, Netflix having problems. These are the biggest companies. And then, of course, the lower tier companies.
Netflix has lost all of their gains that they got. Remember, Netflix went crazy during the financial crisis. But really quick on the oil thing. I want most people, you need a little history lesson. Remember the oil embargo of the early 70s. The agreement was made with Saudi Arabia in 1974 to sell all of their oil in dollars. In exchange, basically the United States agreed to protect Saudi Arabia militarily. That was kind of the agreement. Yesterday, Saudi Arabia announced that they're getting ready for the very first time since 1974 to accept payments for their oil in something other than dollars. And, of course, what was it? No shocker, right? It's going to be Chinese yuan. This is a huge, huge development. And I don't care who you are. Think about this. Almost 50 years of an understanding of oil price in dollars. You protect us. And now Saudi Arabia is like, we're tired of that. We're tired of your authoritarian ways. We don't like it that you haven't supported us enough in Yemen, or you haven't supported us enough with Iran. You want to let Iran back into the nuclear deal. It's time for us to find a new friend. Right, Jason?
That's right. You know, we keep saying that the Federal Reserve dollar is a Ponzi scheme. In other words, it's a pyramid scheme. If Saudi Arabia is going to start selling their oil in yuan, that's like somebody really high. You know, on those pyramid schemes, if you're at the top, man, you can make a lot of money because it's all the guys under you that are feeding your machine to make the money. But all these pyramid schemes, all Ponzi schemes die. And this is, Joe, this is kind of like one of those bigger players at the top of the pyramid scheme, sort of stepping out of it, right?
That's exactly what's happening in all of that. And when we look at all of those things, this is what's going on. I don't know. The girls are looking at me funny. So anyway, 800-951-0592.